All right, what is going on? Hashtag paid creator network. I think we see there's around 104 people here today. I wish this was in person, but we will have to do it virtually for now. To my left or to my right or somewhere on the screen, you know what, Mama Bob, I'll just throw you up so everyone can see your face. This is the man of the hour. This is someone that is creating and has created an incredible tool for all of you to understand what expenses can actually be tax write-offs and do it in a super, super simple way that come one tax season, you're fully set up and it's so easy to roll. But two, I think the really interesting thing, and Mohammed and I were talking about this, as you see your expenses come through and Benji starts to acknowledge which expense can be written off and what can't be, it actually helps you learn what can be and what can't be. So you're like learning on the fly just through osmosis, plus having a getting a really good base of knowledge. See the chat's blowing up. We got a lot of hellos, we got a lot of highs. We got Blake Johnson, we got D, we got Kai, we got Devana, we got Alex. Damn, so many people in the chat. Mohammed, why don't you say what's up?
I'm excited for this. Honestly, it's going to be very. I have my Yeti mic here, so starting my creator journey somewhere, I suppose, if you will.
Hang on,
We'll see how this goes.
everyone in the chat, are we fans of fans of Blue Yeti, or should Mohammed get a new mic? What do we think?
Oh no.
Are we a short team? Are we a Yeti team? We gotta do research. Rode, okay. Gabby's a Rode team. All right, fair play. All right, Mohammed. Well, maybe you're giving them some tax advice. You're giving them advice on their financials, and maybe they'll toss something back. Oh, we got true Rode.
Okay, roads. We got some roads.
Oh, right. 3 Rode. All right, so I guess we got to get a Rode, man. I'm Team Sure, but
yeah, that's what I was gonna say.
Yeah, these are the real creators. These are the real creators. Me and you, kind of pseudo creators. But let's do this. It's 2:33 where I am. I'm based in LA, and Mohammed is based in Vancouver. It is also 5:34 where some of you are East Coast and maybe in between. We have an hour here, and I think here's how we're going to set it up. Mohammed has done 2 things. One, put together a great presentation, but also taken into account all the questions that you submitted when you signed up. So this is a very, very extensive presentation. And the great thing about it, yes, it will be recorded. Yes, you can take notes, but this is a great space to just learn. And you've taken all your questions in, so I think a lot of the questions you'll have will be answered. 7:30 a.m. for us in Japan. Jenna Chips, thank you. 4:30 in Mexico. Thank you guys for joining. This is super cool. And so we have an amazing presentation, and then we're going to leave some time at the end for a little Q&A. I will say this. There is obviously going to be so many more questions than we can get to, but there is Mohammed's information at the end, and you can spam him with questions. He loves not doing any of his own work and just helping creators in general. And so please feel free to. Mohammed, why don't you introduce yourself, say what's up, and then we can jump into the presentation.
Yeah, awesome. Actually, my intro is part of the presentation, so if you don't mind, I can just go right in. How does that sound? Okay, awesome. Hey everyone, welcome. Today we're just gonna figure out how you can actually conquer your self-employed taxes. And I say the word conquer because I really want you to feel like you owned it. Not like how to do your taxes, how to learn about your taxes, but really conquer your taxes. There's a lot of content here. I've tried to stuff as much information as I could, but if there's any reason that I didn't cover something specifically, or if I was not clear about something, please enter your questions in the chat. We're going to be able to go through that later on together. But in the meantime, let's get started. So today you're going to learn about how your tax bill is calculated. And I specifically put that in here because a lot of times there's a misunderstanding of how taxes work. You have a lot of people that are like, oh my God, I'm paying 50% taxes or 60% in taxes, when in reality, they don't fully understand how marginal taxes work. The next part that we're going to cover is how you can actually lower your tax bill. So what can we do to reduce your taxable income and how to maximize your tax bill? And really then the last part is how you can actually go about filing your taxes, because that's another question that a lot of people get confused about or have a misunderstanding around in terms of like, hey, I know how to file my individual taxes, but I'm not sure how to file my self-employed taxes. So we're going to try and cover all of this, or as much of this as possible, and it's a good chance for us to nerd out. I do want to clarify that this information is specifically for folks who file their taxes in US or Canada. So if you live in some other country and don't file your taxes in US or Canada for tax purposes, this may not be applicable to you, but there might be enough for you to take away and understand, apply to your own specific country tax code. You operate a business. That's the other part I want you to know. Even if it's full-time or you call it a side hustle, whatever you call it, the idea is that it's not a hobby. It's with the intention of running a business. And lastly, you haven't incorporated your business. So this is focusing on people who are unincorporated, essentially somebody who is not an S Corp or not a Ontario provincial corporation in Canada, for example. This is somebody who is a sole proprietor, somebody who doesn't even know that they have to register a business and they're just been running their business. That's who this is for, but we'll touch on this a little bit more and help clarify this. I do have some ideas and considerations if you are a corporation. So about myself, I am Mohammed Asadullah. I'm the CEO of Benji. Benji helps you find tax write-offs. We're specifically designed for creators. That's a place that we love. I can't imagine the number of hours I watch YouTube, for example, and the number of creators that exist in terms of newsletters or podcasts or courses. It's just been amazing to see the breadth of creativity that comes from creators like yourself. So for us, helping you make it easier for you really to be able to manage your finances is something we really strive for. I'm also the founder of Women and Color. It's a nonprofit I've been running now for over 7 years with the focus of really advancing and amplifying women, people of color, and LGBTQIA+ professionals in tech. If you are somebody who identifies as such and you're interested in more being able to speak at events, come onto podcasts, become part of a board, check out Women in Color, maybe create a profile for yourself. And of course, you can connect with me on Instagram, Twitter, LinkedIn, one of those. Just look up Hey Mosef. And again, happy to answer your question because I really do enjoy learning and talking to founders and entrepreneurs and being able to see how I can help. Now, some legal stuff I do want to make sure I cover. I'm not an accountant, not a lawyer, certainly not an enrolled agent, which a lot of Americans will know, but the Canadians maybe not. And I'm definitely not Ryan Reynolds, even though we are both Canadians. This is not legal or financial advice, really. All of this is for information and entertainment purposes. So please don't sue me. I don't think I can afford it right now, but let's continue. So let's talk about how your tax bill is actually calculated. Let's understand the thinking behind it. And before we even get into that part of it, let's really understand the purpose of taxes. So regardless of which country you're living in, really taxes help us pay for education, for schools, or healthcare, parks, roads that we drive on, public libraries, and so forth. There's so many things that our taxes pay for. A good example, and maybe this is TMI, too much into this, but a few years ago, my partner diagnosed with stage 4 lung cancer. And generally you think, oh my God, like that's going to cost so much money. But we're so grateful that at the time we were living in Toronto and we were able to go to the hospital, get all the operations, everything taken care of, which was costing millions of dollars according to the doctors. And we didn't pay for any of it. It was free. It was part of our healthcare that our taxes cover. And now we live in the West Coast in BC here in Canada. And the medication that my partner still has to take every day, that costs around $10,000 a month. But thankfully in BC, the BC government takes care of it. So even if we don't have a job, she's still covered and has that. So to me, I don't want you to think that I'm against taxes. I'm not. I care about making sure that you're maximizing your taxes, but there is value of paying taxes. The main thing we obviously need to do is just get some more transparency or improve how those taxes are used really. I think that's what a lot of us have problems with, but I want to preface that, should I say, in clarifying how and why taxes are crucial to ensuring that our country as a whole can move forward. Now, in terms of taxes, you're really taxed on your income. And I mean, there's other nuances, but I'm going to focus on income piece. And for anyone asking, like employment income, self-employment income, whether you have investments, maybe you have crypto, and non-monetary income. So a lot of you were asking about gifted collaborations. Hey, how does that work? And guess what? Gifted collaborations is considered income, and you do need to report it. So if you're in the US, you might receive a 1099 NEC, typically when the gift is over $600. And if you're in Canada, you might receive a T4A if the gift or perk was over $500. Even if you don't receive these tax forms, it is the onus is still on you to report the gift that you have received. So whether it was a getaway, whether it was clothes, doesn't matter what it was, if you receive something that is considered an income. And the best way to figure out how much to report that income to is really look at the fair market value. And what fair market value in general, or in essence, really means is that if you were to go on Kijiji, Facebook Marketplace, whichever marketplace you use, and you were to, post that same product for resale, what is the price? What is the maximum price really that the market is willing to pay for it? So that's what you want to keep track of as well, and something to keep in mind. Now, some of you might be asking, like, what if I only made a little bit? For some reason, Canadians, I've run into a number of entrepreneurs who are like, oh, my accountant told me that if I make less than $10,000, I don't have to report it. That is not true. That is not true. Like, doesn't matter how much or how little you made, that is an income that you need to report. And we'll get into how you can reduce that taxable income so you're not paying as much in taxes, but please report your income. There's value in it. And I'll go into that a little bit later as well too. Now, the taxes you are paying as a self-employed individual. So let's say you have your income that you've now generated. Let's say you made $120,000. And now you're like, okay, of that $120,000, what will my taxes go towards? So if you're in the US, you're paying your federal income tax, state income tax, and what's called FICA, which essentially is Social Security and Medicare. I do want to specify that if you are in one of the 7 to 9, depending on the type of income, states specifically, you actually don't have state income tax. So that's another thing for you to consider. But before you decide to move to another state or country with lower taxes, like, let's actually understand how marginal tax rates work. So your federal and state or provincial income tax are calculated based on marginal tax rate system. So what it really means is that think of a tier system, right? So it's like your first $50,000 of income is going to get taxed at X rate. And then the other $50,000 in income after that is going to get taxed at another rate. So as you can see, I don't know if you can actually see my mouse and whatnot. So I'll move around and somebody would tell me, even though I can't see the chat, so I'm here on my own. So over here, this is Canada's federal income tax brackets for 2023. I use Canada just because it's much more simpler for everyone to understand marginal tax rates, and then you can apply it for your own federal and state income taxes and whatnot. But really, as you can see, for your first $53,359 you earn, you're only paying 15% taxes on it. And then anything above that, so let's say you made more than that, then you'll fall into the next bracket, which goes from 53,360 to 106,770. So here on the right, I've created like an example of what would happen if you made $120,000 this year. How much of it will you actually pay in taxes? So here you'll pay 53, or the portion of the $120,000, which is the first portion, which is 53,359. That you'll pay 15% taxes on, which will be about $8,000. Then the next portion of your $120,000, which is about 53,358, you're going to pay 20.5% taxes on that, which is going to be about close to $11,000. And then the remaining difference of the $120,000 that's left, you're going to pay 26% taxes on it, which is going to be about $3,453. So really, altogether, if you combine it, you're paying $22,395, or about 18.66% of the income. So as you can see, it's not just like hey, you're paying what, 33% as a whole on all of that income. You're essentially paying different percentages based on how far or how much more income you're making. I'll go into that a little bit later, and I'll come back to this to really bring it home. But hopefully this is helping you understand that marginal taxes, or at least how we are taxed in the US and Canada, is much different in terms that we use the marginal tax rate system. And they're tiered in these bucket systems, if you will. If I'm not making any sense there, please add into the question. I'm trying to explain as much as possible in such a little bit of time, but making sure it's accessible to as many people as possible. The next part of it, as I mentioned, you have the federal income tax, state or provincial income tax, and then you have the self-employment portion, really the CPP in Canada or the Social Security or Medicare in the US. So that portion of it, typically, if you are an employee, you'll notice that on your bill, you're paying maybe like 7 point something, or if you're in Canada, you're paying maybe like 5 point something on goes to CPP, and EI goes a little bit other portion. However, when you're self-employed, you pay the full portion of that. So typically your employer covers half, you cover half as an employee, but as a self-employment or a self-employed person, you're paying that whole amount yourself, which is 15.3 and 11.9 of your total income of the $120,000. Now, if you are in Quebec, hello, bonjour, you will pay QPP, which is Quebec Pension Plan, which instead has 10.8%. But in the event there aren't any folks from Quebec here, I'll move forward, and then you can message me later. Now, typically when I walk through all of this, and wow, I use my hands a lot. Typically when I walk through all of this, a lot of the thing that most people want to know is like, how much should I set aside? Like, I don't care about marginal tax rate. I don't care about FICA or CPP or any of that. Just tell me how much I need to put aside. And so I've put together this basic guideline. Please do not say, hey, Mo told me to set this much aside and that's what I did, and now I owe a lot in taxes, which is nowhere close. Like, no. These are just guidelines. It may vary based on your financial situation, but here's a sort of rough guideline. Again, if you're making $50,000 annually as a whole, then maybe set aside 25%. If you're making anywhere up to $100,000, then maybe put aside 30%. And if you're making well over $100,000 annually, then you may want to consider putting aside 35%, if not a little bit more. It varies, but that's the general guideline. If you just want a quick shortcut and don't want to understand or care about marginal tax rates or any of that other kind of stuff. Now that we've kind of talked about like, okay, you're paying so much in taxes, how do we actually go about lowering a tax bill? Now, as part of your tax bill, what you need to understand is that there's two things, tax deductions and tax credits, and let's make sure we don't confuse the two. So tax deductions is going to lower the amount of money that you'll be taxed on. So if you, again, earn $120,000, but you had $20,000 in business expenses, then you're really only going to be taxed on $100,000. In comparison, tax credits reduce the amount of tax that you owe. So what that means is that if you end up owing $10,000 in taxes and maybe you receive some sort of credit based on your state or your country that you're in, and you received a tax credit of $2,000, now all of a sudden you only owe $8,000 in taxes. So that's a very quick difference of tax deductions versus tax credits. And here's another sort of like comparison of what that would look like. So tax deductions can include business expenses, if you're making our traditional IRA contributions or RRSP contributions if you're in Canada. Charitable contributions as well can be part of tax deduction. There are some tax credits as well too. And then of course, tax credits can look like child tax credit if you're in the US, or earned income tax credit, or Canadians, if you're familiar, first-time home buyers tax credit. So essentially, generally credit will be in the name, so you'll know it's a tax credit. But one thing to also understand within the tax credit is that not all tax credits are created equal. So what I mean by that is that there might be some tax credit that are non-refundable, which means that if you owed, again, $10,000 and you received a tax credit of $15,000, you won't get that difference of $5,000. So you will have essentially just reduced your tax bill to $0, and that difference of $5,000 you won't get as a tax refund. Where otherwise, if you have a refundable tax credit, what it really means is that, again, if you had $10,000 that you were owing, and of that $10,000, you received a $15,000 tax credit, then you will actually receive a $5,000 tax refund when you go to file your taxes. So something to keep in mind. But again, as you go through this, you'll start getting a better grasp of all of this. In terms of deducting business expenses, I'm going to use the IRS definition here, or a very generalized IRS definition, which is really that you can deduct any ordinary and necessary expense that you incurred as part of building and supporting a self-employed business. So typically this can be, Calendly, software and app, Zoom, if you bought a new camera, part of your mobile phone bill, part of your home rent, mortgage interest, all of that kind of stuff. And there's more things that we can, of course, cover as part of it. But a few things I really want you to also keep in mind as part of your deductions are the ones that I find most people end up overlooking, which are interest paid. So let's say you took a business loan and you're paying interest on it. That interest you can actually write off as part of your business expenses. The other thing that I notice a lot of creators and self-employed individuals overlook or forget completely is payment processing fee. So a good example of that is you decide to use FreshBooks or Wave or Stripe, any one of these invoicing solutions. And when you sent the invoice to your client paid you money, you will notice that a portion of the money was deducted because it's processing fee. You can actually deduct that processing fee. So a lot of times people end up not taking or accepting credit cards because it's like, oh no, I don't want to pay like 2.9 or 3.5%, whatever it is. It's okay. You can actually deduct that. Well, maybe it's not okay because everyone's financial situation is different, but you get my point. It's like you can actually deduct that later. So something for you to keep in mind and make sure you're tracking. And lastly, the other thing I've noticed a lot of folks overlook or don't think it's a business expense are professional development. So whether you bought a book, you bought a course, webinar, attended a conference, anything that's really contributing to your professional development that's going to help you grow your business, it has to be within the realm of your business. You can deduct that. So a lot of times when people use Benji, we send them a push notification. It's like, hey, what's the Audible subscription at professional development? It's like, oh, I didn't think about that, but that's awesome. Yeah, it is. So something to consider. Of course, everyone's use case is different. And if you're wondering, hey, wouldn't it be great if there was a list that I can just kind of go to and figure out all the different things that I can write off? Well, you're in luck because there's an article on our site, 40 tax write-offs for content creators, that gives you a list of all the different things you can deduct. If you're not sure what our website is, it's betterwithbenji.com, which is on the bottom of this page. And you can just go to the footer and you'll see this content there. So quick little plug there as well too, or sponsored post, as some YouTubers might say. But at the same time, I'm fairly certain there will be someone in the audience that's thinking like, but what if I wore my new jumpsuit in a video? Can I write this off? And if you watch Colin and Samir, especially their new creator support channel, you'll notice that Colin asks the same question, which is like, hey, I'm wearing this jumpsuit here. I've had this lying around, or I bought it. Can I write it off because I'm wearing for a business expense, or because I'm wearing in this video? And it's like, no. You cannot just go ahead and start writing off clothing, or like you decided to get yourself some office snacks and now you can like, well, it's a business expense, I can write it off. It's no, like there are exceptions, which I have on the screen. And the thing that I told Colin here, or tweeted at, if you will, is that as that jumpsuit, if you just go out and buy that jumpsuit, it's not a tax deduction because it has nothing to do with your business. Like, for most people, unless they're going to wear in every one of their video and it's a uniform, which you can deduct, you can't just go out, buy some clothes and be like, okay, I'm going to write it off now. It's like, no, not exactly. However, say you bought that jumpsuit, for example, and then you put your logo, let's say in this case, Press Publish logo on here. You got it embroidered or screen printed, whatever have you. You can make the case that, hey, that jumpsuit and that logo embroidery combined together, now it's becoming advertising, right? So that you can deduct because you're promoting your business, you're wearing that and you're showing it off. You could make the case that yes, that is tax deduction. Other things, and I say dining out here, I don't mean like business meals with clients. I mean, it's like, I'm going to go to a coffee shop and I'm just going to work on my business. And because I'm at a coffee shop working on my business, I can write off my expenses. Nope. No, you can write off business meals that you have with clients, but if you're just out and about having stuff for yourself, that's not specific. So I'm hopefully helping clarify things you can deduct and can't deduct. I understand that there are some creators that are, it's like, hey, I am a video game streamer, and so I bought a PlayStation and I bought a new screen. I'm not saying, hey, that's not the course of business, but you have to be very clear as how it is part of your business and be very specific around it. Have documentation around it too. Really, by documentation, I don't mean anything fancy. You can just put it into your Apple Notes, or if you're using Benji, you can just add it as part of your notes into transaction notes. But have a note about as to how that is a use case for your business. Because essentially, you want to think to yourself like this. If somebody from IRS or CRA comes up to you and it's like, explain to me how this was a business expense, and you are struggling, then you know that that's not a business expense, right? But if you're like, hey, I use this as part of my video, it's very specific, it wasn't for personal use or reoccurring personal use. And what I mean by that is that there have been some folks that are like, oh, I bought this new shirt, I wore it in my video, I can now write it off. It's like, no, because for the majority of the life of that item, it's going to be one person and not in that video. So you want to be careful about that. Same thing with like, oh, I got my hair done, I'm getting my nails done, like I can write that off. Not exactly. Like I will say no for most of it, but where you can make the case is that you have a photo shoot that's taking place for a client, and then you're getting your nails and hair done for that specific photo shoot. Yes, that you can deduct that'll go under advertising and marketing really. But outside of the use case where it's not exactly related to the business, then it becomes really hard for you to make a case as to how that's helping your business. Hopefully I'm making sense, but please add questions to the chat and I'll try and move forward. Now, by moving forward, I can't move forward. There we go. A few things I do want to touch on for folks in the US is the different types of tax deduction methods that are available to you. It boggles my mind the amount of different ways folks in the US can pay their taxes. But if you're traveling and are having business meals at your travel, you can actually write off, obviously, the cost of that meal expense, that business travel meal expense, or you can look into essentially the federal meals and incidental expense per diem rate based on the county to see, like, hey, would I actually get paid more, or would I actually be able to get a better deduction by going the per diem rate versus doing the actual method? Similarly, for those who work from home and have a dedicated part of their home allocated for work, even if it's a workstation, you can deduct a portion of your home. And one way is to, of course, do a calculation where it's like, okay, my work area takes up 100 square feet and my condo or my apartment is 800, so I'm really using only a portion of it. The other portion is like, okay, I'm using 100 square feet and I can multiply that by $5 up to 300 square feet and be able to just take a simplified home rate, so you don't have to worry about like what percentage to deduct of each of your expenses. You just say, hey, I'm going to take that deduction. And similarly, the other part of it is— I found this on the web. Sorry, Siri decided to freak me out. The other part is really standard mileage rate for business travel. So if you're using your car for business purposes, whether you're going to meet your clients, whether you're delivering something to the post office, whether you are going to another city, for example, for work, you can keep track of your mileage and be able to essentially take a standard mileage rate or do the calculation of like, okay, I drove 200 kilometers out of 1,000 kilometers as a whole last year. And so as a result, I'm going to deduct 20% of all of my vehicle-related expenses. So I'm not going to go too much into that, but if you have any questions, again, ask and I'll be able to clarify this further. The other part that you also want to keep track of and understand as part of your overall business expenses is depreciation. And really, this comes in into the picture when you have business assets. So what is business asset? In most cases, it's something that's high priced, but generally it can be anything that continues to be used year over year and creates value for you and your business. So examples of that is laptops, cameras, car. Typically, once something is a business asset, you'll be depreciating it year over year. So for example, in Canada, you have capital cost allowance, and you might have a class 10, let's say, which I think has a 20% depreciation rate. And what all that means is that you can only depreciate 20% of that total amount per year. So let's say something is $1,000, you depreciate $200 this year, $200 next year, and so forth until the full value of that item is depreciated over those 5 years. Again, another benefit to folks in the US is actually that you can make a D-minus safe harbor election, which allows you to deduct up to items that are up to $2,500 in one single year. And you may want to consider this in the event that your taxable income is really high. So if you're like, oh crap, I had an awesome year and I made a lot of money and I need to figure out what I can deduct, then you can make that election and be able to deduct $2,500 per item that you have purchased, if you've purchased, of course, in as part of your tax filing, and be able to take that in and be able to reduce your taxable income. Otherwise, they generally say to, hey, depreciate your assets over year. Yes, you have to track and you have to keep that in mind. But what's good about that is that should you end up making more money next year, you'll have the depreciation that you're bringing over and be able to like reduce from that, right? So it can come in handy, but of course there is options available and something for you to talk to your accountant or your EA about. Of course, this is also another place for me to do a little sponsored post plug, if you will, which is that if you're like, I don't understand any of this, how the heck do I do this? This might be a good time for you to check out Benji. So you can start tracking your business expenses for free. You don't have to pay anything. It's free to use up until your first $1,000 in tax write-offs that you find. The cool thing is that all of our tax reports is structured the same way that your tax forms in US and tax forms in Canada is done. The other cool part about Benji is that you don't actually have to go into the app and remember to keep up to date. Benji will actually send you a message like, hey, what's this? You went to Starbucks. Was this for a business meeting? And you can say yes or no. And if you say yes, it's like, great, now keep track of it as a business expense. Do you want to keep track of it going forward? And so it's able to essentially like a concierge or assistant, if you will, for helping keep track of your business expenses that way. And you can, of course, go and make changes, but I'll stop here in terms of the sponsored post part. Now that we've understood, hey, how do tax credits, how do tax deduction benefits, and if I was making $120,000, like what does that mean for my income? Now, let's assume that you did make $120,000, but you had $15,000 of business expenses. That will bring down your taxable income to $105,000. And if it's now at $105,000, you'll notice that you're no longer in the third bracket. You're only in the first two brackets. And as a result, your tax that you had to owe, which was $22,395, now you're only paying $18,590 in taxes. So that's about a saving of $3,805 or about 17% tax savings. So that's kind of how you want to think about like, okay, I've made all this money. How can I reduce that taxable income? And what credits can I find to be able to not actually have to pay those taxes or even get a refund in exchange? I do want to preface that lowering your taxable income isn't always a good thing because, again, I'm trying to tell you how you can save taxes, how you can like deduct stuff, what you can deduct, all that kind of stuff. But sometimes it's actually not good to have too low of a taxable income, which sounds so silly. But the time or place where it comes into a consideration is when you have to go to a bank because you want a loan or you want to get a credit card or mortgage. It can be very difficult for the bank to see you as someone stable who's earning a lot, especially going back a few years. If you're constantly trying to bring your taxable income lower and lower, or just keep as low as possible to ensure you're paying as little taxes as possible, it can impede you in that when it comes to those kind of conversations. The other part of it is that you might actually be impeding your business growth by going out and just buying stuff because you're like, oh, I'll just buy this because it's a business expense and I can just write it off, and then not realizing that you're not thinking clearly about what is the long-term growth of this business. Like you shouldn't be shy of paying taxes. There's other way around it, which is you can incorporate, which I can get into, but those are the considerations you want to keep in mind. Don't just focus on like, okay, I have to have the lowest taxable income possible. I'm going to register or incorporate my business right away before I have even made any money. Like too many creators and too many entrepreneurs really jump to optimizing for their taxes rather than actually making any money. So I'd rather you make money first, figure that out, and then start figuring out, okay, how do I optimize and maximize my taxes, right? Now that you've got everything kind of figured out and you've got your income, all the documents together, you've got your tax deductions, all the receipts or transactions or statements together. Now, how are you going to go about filing your taxes? So if you are in the US, you are filing a Schedule C. So that's the form, Schedule C form 1040, and it's actually quite a simple form to fill out. I was amazed by how clean and simple it is, given our T215 for Canadians is much more longer. There's a lot many pages. Wow, that's redundant. A lot more pages in there. So it's been very keen to be learning more about the US tax code and whatnot over the past while. But these are the forms you'll be looking for. And something I want to preface is that these forms aren't being filed separately or different than your personal income tax. So when you go to file your personal income tax, you're going to be essentially adding these forms in addition. You'll still be filing your personal taxes with this as part of that. So it'll be done as a like a happy mail that you're sending to the tax services or government, really. If you're in Canada, you have until May 1st to file your taxes and make sure you pay any taxes that you owe. If you're in the US, you have until April 18th. Generally, in the US, it's around April 15th, but because there was a holiday and it landed on the weekend, it's been moved to April 18th. Similarly for Canada as well, too. It's on April 30th, but it's been moved to May 1st just because April 30th and it landed on a weekend. For Canadians, I do want to highlight that if you're collecting GST, HST, your GST, HST are also due by this date at the same time, along with your other income tax as well too. So something for you to keep in mind. Now, if you don't remember all these dates, again, another little plug. We actually have both for CRA and IRS dates available for you that you can go to our website, click on the link on the bottom of our footer and be able to find this resource. We've actually created these Google Calendar import options as well too. So this way you can just see it in your Google Calendar or whichever calendar you use technically to be able to remind you rather than you having to come back to this website as well too. So some consideration for you there. Now, in terms of tax filing, the actual filing of it, a lot of times when I talk to people, it's like, hey, do you know an accountant? Do you know an enrolled agent? Do you should I just go to TurboTax or should I actually go to H&R Block or should I use TurboTax? And those are options. You absolutely should consider working with a professional who is a CPA or an EA. If it's some random person that you just found online, then maybe be very cautious around that. But there's a lot of great people that can generally definitely help you. But if you were looking for free options, and I genuinely mean free, Cash App Tax in the US and Wealthsimple Tax in Canada. I've used Wealthsimple Tax in Canada here for I don't know how many years now, and it includes all the personal income tax stuff as well as if you have self-employment income, even rental property and so forth. Each of these have some limitations if you have a really complicated tax system. And I don't mean complicated that you're self-employed, I mean complicated as in that if for Cash App Tax, if you're in the US, then there might be, then there was like two state sales tax that you are collecting and paying. It can get tricky around that and it doesn't support that. So that's what I mean by complicated. But if it's just like, hey, I need to file my income tax, I need to include I need to report my self-employment income, I need to report my investments from dividends, all that kind of stuff, that's no brainer around that. And I encourage you to give it a look. Both of them are available, both of them are free. So give them a try. In terms of estimated tax and quarterly installments, this is something I do want to make sure I do a good job explaining. Obviously, lots of words here, but the main premise of estimated quarterly taxes or quarterly installments in Canada is really that if you're going to owe $1,000 in taxes or more, you need to start giving the government or paying the government quarterly estimates in taxes. So essentially you're like, okay, I'm going to owe $2,000 in taxes. So as a result of that, I need to make a payment of $500 in my first quarterly payment, $500 in my next quarterly payment, $500 in my next quarterly payment after that. And it will fluctuate, obviously, as you generate more income over the course of the year, and your math will change. But what you want to do is make sure you're making these payments. Similarly, in Canada, same structure really. Generally, if you're going to owe more than $3,000, same thing works for you. However, if you're in Quebec, it's $1,800. So if you're going to owe $1,800 or more, then you'll have to make sure that you're paying it a lot sooner than the rest of the Canadians do. And same thing applies if you're collecting GST, HST, which you then also have to start paying as part of your income taxes you're going to make commitment to. Now, before you start freaking out and be like, oh my God, I have not been paying this, and you're telling me, well, actually, I haven't told you. There are penalties and interest that you'll have to pay if you're not doing this. But before you panic, something to keep in mind is that if this is your first year that you're doing this business, and generally if you didn't owe any money last year, then you should be okay in most cases in terms of filing for this year and not have to worry about any penalties. However, going forward, if this applies to you and you did end up owing taxes or whatnot, then you will start have to make quarterly estimates. And that, again, if you don't know which dates you can do, especially in US, which is not exactly quarterly, you can go back to that same resource around dates that I told you about and find out that information there. Some of you might be like, but what if I made a lot of money, like a lot of money? At that point, for me, I would start looking at, you can't change last year. There are things you can deduct and certain elections you can make, all that kind of stuff, but you can't change that. But if you're telling me that, hey, going forward, I will be making all of this money, then now is the time where you really want to look at incorporating. So that's an S Corp that you want to consider if you're in US, or a federal provincial corporation if you're in Canada. If you're in Canada, I can give you a code to owner. You'll get 20% off. And from there, you can then also get free RBC banking. If you're in US, there's so many options. I'm happy to connect you, like LegalZoom. There's some other options that I'm obviously blanking on right now. So something to consider. But if the rest of this or all of this was like, actually, I'm good, I'm still going to remain a sole proprietor or unincorporated, if that's what you call it, then check out Benji. Again, you can start tracking your business expenses for free. We don't ask you for a credit card. And if you are using this link, which has been at the bottom of the screen this whole time, which is betterwithbenji.com/#paid, or if you scan this barcode, you're able to get up to $150 off on our paid plans. So this is $75 on our Pro plan and $150 on our Unlimited. And that's a great way for, if you do have to upgrade, that option is there for you to be able to get an even more value out of this partnership of #paid. Finally, again, my name is Mohammed Sadullah. Please, if you want, you can connect with me, or maybe I'll come on your podcast or whatever, but we'll figure it out. But I'll open the room up for audience questions because I know I went through a lot and hopefully I made sense because I recognize this information can be very dense. Danny, how are we looking there? Danny? Hello? Am I just on my own? Oh, let me go back. All right, let's see. Okay, there's a lot of questions. Okay.
All right, here.
Oh, Danny, you're back.
No, I was just letting it breathe. I was letting it breathe for a little bit. All right, 45 minutes. How's your mouth feeling?
That's a weird question. I'm good. Just having some.
When. Guys, couple of things. So much knowledge there. One, it's also cool to see people helping each other out in the chat. I would definitely encourage it if someone has a question and you believe you have the answer, or feel like you could help them, why not jump in as you've been doing, or go behind, whether it's through IG or any other platform, to just help each other. But first off, Mohammed, thank you so much. That was ridiculously insightful. Tons of questions through the chat. Let's do this. We have 15 minutes left. And so
the most upvotes?
Yeah, I am looking right now. The most upvotes is
What is a
No.
start live answer? Do I have to click on it and it brings it up?
I think, yeah, it will. So like whether you click it up or you bring it up or I do. Um,
Cool.
okay, I'm gonna bring up this. I feel like you might have spoken about it, but this question comes up often, so I just want to make sure that it's answered. But the question is, as a creator, is anything used in content considered a business expense or only if you've purchased for an ad in content?
So if you used the camera, or the camera is there with a purpose of you being a content creator, the mic is there for you being as part of a content creator, your Descript subscription is there as part of your purpose of a content creator. Maybe your studio setup, let's call it that. Some might call it, office area. Maybe you call it studio, whichever. Maybe you have specific lights for that because you're like, hey, I use this when I'm streaming. I've got my table, I've got my chair. All of those specific things that are going to the making of that content, you certainly can make the case that, hey, this is for my business, and as a result, it's a business expense. Of course, some of it is an asset, so I have to depreciate it unless I make the election there. But for most cases, those are considerations there that you can say, hey, this is a business use case, and as a result, a tax deduction. If you are, going outside of this, let's get a little creative here. It's like, again, going back to the question of like, hey, I have this dress that I just purchased and I'm going to wear it in my video, or this hoodie that I just bought, I'm going to wear this in my video. Can I write that off? And then to me, again, the example goes back to, it's like, hey, you're only going to wear it once. And then after that, you're going to wear it outside for your own personal use case. And clothing is one thing that there's actual um, tax cases, law cases, whatever the proper word is, that I'm blanking on right now. There are actual rulings made that clothing is not something you can just go about and write it off. There are exceptions, as I've said, where if you position it in such a manner that, hey, it's actually advertising for my business or advertising for my channel because I have a big sort of like hashtag paid logo on here or something of that sort, then you can make the case that it's advertising and you can go about writing that off. But generally, if you're like, hey, very little bit of it was for business and the rest of the use case is personal, then I will say no. But of course, it can vary very much because creators nowadays, like, where does the business end and where does personal begin? It's so it overlaps quite a bit. So if you have very specific questions, DM me or message me or even write it here, whichever. Let me know and I'm happy to help there.
Great answer. I feel like that's the point that I think creators love taking advantage of, is like, oh, the world is a production set. So if I grab a coffee this morning, like, and it's in my video, I guess it's a business expense. But I think what you're bringing in here is just making sure it's almost like defensible. Like if someone were to ask you, like, what are you doing with this thing in your video? Oh, this is the purpose it serves. And if it's a reasonable purpose, don't push those bounds of it being unreasonable. Because I feel like the one thing I've heard from creators is, and also managers at that, is if you keep pushing the bounds over time, your expansiveness for thinking that like things can be tax deductible or they can be an expense just start to get ridiculous, and it doesn't set a good precedent. So I'm a big fan of the answer.
Yeah. One thing I'll add to that, sorry, and we can go to the next question, which is that the IRS actually audits more small businesses, which creators fall under, than it audits larger, massive businesses or even billionaires. And similar aspect here in CRA with Canada as well too. So the risk of a small business being audited, or the chance, should I say, is much more higher than if you're like a multi-million-dollar company or multi-hundreds of million-dollar company who may not get the same audit risk or chance of that audit. But the other part is also they at that point can afford to have lawyers, can afford to have like experts to really be able to structure their companies accordingly. So something for you to keep in mind.
Cool. I think that's a great place to end that there. Let's go to, like, I think this question is solid because I think for a bunch of people in hashtag page network as creators, it's not full time. Being a creator is either, it could be a passion project, it could be something that they're working towards, something full time, but right now it's part time with that survival income on the side. And so Ashley came up with a good question here. If I work a full time job and do social media or essentially be a creator part time, does the income from my social media get added onto my own personal income for marginal tax purposes?
Yeah, that's a great question, and that is correct. It does get added to your marginal tax rate. The Depending on how much you're making, the good thing can be, if there is a good thing about taxes, is that if your employer is already deducting those federal income or state or provincial income and the CPP-EI or Social Security, Medicare, all those deductions automatically, if they're withholding those taxes and submitting that to the IRS CRA, then the chances of you having to owe a lot more start to reduce just because that's being covered. I mean, you still need to make sure that you're setting money aside, but maybe the portion of the money that you're setting aside, let's say if you're making a lot more, it's not 100 or sorry, it's not maybe 30 or 35%, but rather 25 to 30%. So it'll adjust accordingly. But you will still have to pay taxes on that income generated. But of course, because now you're creating part-time income, you are creating income. The good thing is you can deduct a lot of stuff. So your phone bill, you can deduct a portion of your phone bill. If you had to buy new gear for your content work, let's say you bought a DJI, that little cam that a lot of bloggers use, you can now deduct that as well too. So there is different considerations now open up to you as well as part of now reporting that income. So something for you to consider. Hopefully I answered your question, but again,
awesome.
Message me, DM me, please.
Awesome. Okay, I'm going to bring this up because I feel like it's a little bit more technical and might confuse some people. And so I know it was covered a little bit, but Rennie comes with the question, can you explain what you mean by needing to pay GST or HST quarterly? The CRA said I could pay yearly. So I think that the thing here is like, why would you have to pay it quarterly versus paying it yearly? And yes, I think GST, HST is specific to Canada. I do feel that there is some crossover and some relatability to that in the US. So I think this is a good one to address.
Yeah, so first thing, hi Rennie. Those who don't know, Rennie is a YouTube creator. Rennie the Resource, you can go check her out. Just a little plug for others here. But to Rennie's point, generally most people are paying their GST on an annual basis, especially because they haven't ended up owing as much income taxes when they file their taxes. So not just because like they're not making a lot, but because maybe they had a job at the same time, and as a result, they had tax deducted from there. So their total income tax owing wasn't actually as high, and as a result, they didn't reach that threshold of $3,000 that I had mentioned earlier. This is Canada specific. So if you end up owing, was it 3,000, 4,000? Now I'm forgetting, I'm sorry. Whatever that threshold is that I mentioned earlier, if you're not meeting that threshold and if you're under it, then you don't have to make those quarterly GST, HST payments. But once you start reaching that threshold in terms of income tax owing, like the amount of money that you now have to pay in terms of taxes, and when you go to file your taxes this year, you might end up owing, let's say, $4,000 or $5,000 in taxes. So that becomes sort of like the trigger at which the CRA is now going to come back and say, hey, you need to start paying us in quarterly installments because we can't trust you to have all that money that you're going to need to pay us in taxes come next year. So as a result, we want to make sure you're paying us quarterly tax estimates or quarterly installments in Canada, to ensure that we're not waiting until the last minute to figure out that you have the money or not. And then we have to worry about penalties and blah, blah, blah. So hopefully that clarified that, Rennie. But again, just email me, DM me, we chat, so we can chat there as well.
Awesome. Let's see, we got a couple more minutes here. I don't know if this is a little bit too technical, but Ara comes with the question. Let me see, where is it that I can bring it? Here we go. I feel like this is a quick question to answer, quite tactical, but something that we can bang out and might also give perspective to others. If I'm from Canada and receive partnerships from US companies who give W-8 bends, I hope I'm saying that right, am I supposed to file with both the IRS and CRA or convert them to CAD and just the CRA?
Yeah, so hopefully you are living in Canada and are filing Canadian taxes. And I want to make sure I don't get this answer wrong because there is some nuance here, and this is something I've had to figure out earlier myself, and I'm blanking now on the exact answer because I was in a Dawn commercial of all things. So I had to go through this whole process, but really what is happening is that when you're filling out the form, you're making sure that you're communicating that, hey, that I am a individual, or I think W-8 BNS, it might be for companies, if I recall correctly. I'm obviously blanking, so don't hold me accountable for a minute. Follow with me later, and I'll make sure to give you the right answer. But the general answer is that if you're Canadian, you're making sure you're reporting the U.S. income that hits your account in Canadian dollars. So if it didn't land in a Canadian dollar account, if it landed in a US dollar account that you have, you want to make sure you figure out what that dollar range is, the foreign exchange rate is for that day, and you just essentially use that for what you'll claim, hey, was my income, and as a result, you're going to pay taxes on top of that. In terms of US, you're generally filling out these forms, and that form tells the US government how you will be treated, if I recall correctly. And as part of that, you can say it's like, hey, I'm not a US tax resident, so as a result, I'm not paying US taxes, and only a certain amount of it should be withheld, blah, blah, blah. Again, as to my memory, but I can look into this and follow if you DM me, and I can help you with that.
Cool. Yeah. No, I think there's a lot of nuance when it comes to tax, and not only geography based, but types of income, types of business, where you live, where you don't, and so super helpful. Let's see, 3:28. So we have a couple of minutes. Mohammed, is there a question that you see in the question tab that you want to jump in and answer?
Yes. Okay, so I'm going to answer two questions kind of at the same time. So the first one is from Hala, if I pronounce it correctly, which is that, hey, I received gifted items last year that were cumulative. Wow, English is my second language, as you can tell, so I'm struggling here. But essentially, altogether, I received the items were worth over $500, but not individually. I still need to report that, correct? Yes. So just generally any gifted item that you're receiving, you should be claiming as an income. Can there be considerations? Can there be considerations, which is just like, hey, I received more so like a discount, or I received, let's say, I had to pay for a portion of it, or whatever the case is. Then when it's a discount or whatnot, then you don't have to worry about it because you paid for it. There's a discount applied, so it's not a reported income. It's not exactly a gift in that sense. But if it's something where you're like, yeah, I'm getting like altogether, like I have $1,000 worth of like products here, then you really want to make sure that you're reporting it. But of course, don't shy away from that, because then you'll be able to consider other things that you can deduct and be able to offset that. So just because you're reporting income, you don't want to see that as just like a good thing or a bad thing. There's value in both ways. Hopefully this answers your question. And then the other one that I want to make sure, because it's the second most voted, and otherwise the audience is going to come after me, which is that, are we able to write off items that we purchase specifically for content purposes, such as a review video? So yes, you can, so long as it's necessary and ordinary. And what I mean by that is that, let's say you are reviewing, I don't know, geez, why am I blanking on? Danny, give me an idea. What should I review?
You're reviewing your Yeti mic.
Oh, okay, let's say I'm reviewing my Yeti mic. So for the sake of that, it's like, okay, how necessary is for me to own the Yeti mic versus renting it or being able to borrow it from a friend versus no, I had to buy it. This is something that can't be returned. And this is part of my larger business, which is that I create content where I review XYZ, and it makes sense in that case. But if it's more so like, yeah, if I just buy this thing and I just review it, quote unquote, and I can just write it off, then there might be that nuance of like, is this really a necessary business expense? And the other part is, of course, is that what was the term? Is it ordinary, necessary, reasonable? All this to say is that if you could have purchased something that was, let's say, much more cheaper or reasonable, let's say, cheaper doesn't always mean bad, but let's say you, instead of going to a bar where you could have spent $100, you ended up going to some big fancy club and spent $1,000. The question becomes like, which one was more reasonable and necessary? Like, where do you draw the line? So it's about the IRS and both the CRA. They don't care that you have business expenses, or sometimes there might be certain things where it's like, you could have claimed this in this manner, but you didn't. That's okay. So long as you're being reasonable, they're going to understand, and you're going to be able to adjust your taxes should you get audited. But if you're being really unreasonable, so for example, a lot of your expenses are meals and entertainment in Canada, or just business meals in the US, and you're like, yeah, like as part of my thing, I take my clients out to restaurants a lot, but really it's like, what clients? You create content. I can see you creating content. It has nothing to do with business meetings. How are you writing so much off? That's when a lot of that abuse, if you will, comes into the picture, and that's where the CRA or IRS will come down and be like, yeah, it's time for an audit. Let's talk about this. So hopefully this answers your question.
All right. Well, a long and very information-packed hour. Mohammed, thank you so much for all this. I knew that there's going to be questions popping up in the chat, some very nuanced, some very specific to scenarios. So again, two things. One, more than welcome to email Mohammed, but if there are other people in the chat that you've seen had similar questions or maybe answered a similar question, hopefully as creators we're all here to just help each other. And so definitely hit each other up and make sure that you're getting the right advice. This is one webinar that we put on. You will be able to watch the recording. Should be up in a day or so. We'll put it on YouTube. It'll be on our channel, which is just #paid, all spelled out. There is going to be another financial-based, let's call it webinar, in a month or so. It's not going to be specifically about taxes, but it's more so expansive about being a business, what you have to take into account. So a lot of crossover on what Mohammed was talking about, and the reason we're going to do so is because we understand that this is nuanced and this is at a lot of times tough to grasp. So the more we can offer, and it's going to be with creative juice. So look out for that. But in the meantime, Mohammed, thank you so much for all this. This has been very informative to everyone who showed up and actually engaged and asked questions. Thank you all, and excited to do this sometime again soon.
Yeah,
definitely
I hope so.
And definitely go follow. Yeah, and definitely
maybe the
go follow
audience can request to have me back with different other topics.
Yeah, for sure. Maybe we do some. Maybe we do like a weekly or a bi-weekly office hours where we bring in someone on like a thought leader on a certain subject, and you guys can just pepper with questions. So maybe look out for something like that soon. But in the meantime, have a great rest of the day wherever you are in the world. Thank you for tuning in. Mohammed, thanks again for bringing all this information for us.
Awesome. Thanks, everyone. Thanks, Danny.
All right, guys. Catch you soon.
Cheers, everyone.